How would you manage $1 million portfolio? So in this video, I'm going to go through the allocation for $1 million portfolio, how you can do it to maximize your gains, how much you should manage it yourself, and how do you choose between stocks, bonds, guarantee certificates or term deposits, hedge fund, private equity. So let's get started. So at this stage of your life, you are an accredited investor because your portfolio is $1 million. So congratulations. And normally, as you get older, your financial advisor will advise you to put more into bonds and term deposits because the return there is guaranteed, even though you're only just getting 3 to 4%, barely beating inflation, so then you're not really getting any return, but it's safe. So for term deposits or CDs or GICs in Canada, the average return right now is around 3%, but as the Federal Reserve is cutting interest rates, this number is going to be a lot lower. Bonds, 5%, slightly higher, but the return here is pretty much fixed, so that's why it is so low. Now, if you invest in S&P 500, it's a little bit more volatile, but you're getting 12%. And the last 30 years, the average return is closer to 10%. Sometimes people will quote 8% as well. Now, as an accredited investor, you can invest in hedge fund and private equity funds. And the top 50 hedge funds in the last 4 years gives you an average of 15%. And the reason why their return isn't that high is not because they don't make money, but it's because they charge a lot of fees. So before the fees, their return is actually closer to 21%, but then after you factor in all the fees and they take off 20% of the profit, you get 15 at the end. And finally, you can try to invest yourself, and I would say most people get close to around 10 to 12%. Some people who are a little bit more savvy get closer to 20%. Now on the other side, this is the return I get from these various investments. So first, I don't really care for term deposits because I have a very tailored investing strategy. I don't do bonds as well, so that is 0% for me. So I actually have zero allocation into these. Now, one thing I noticed that I didn't get to add in here is actually Bitcoin, but I'll get to that later in this video. Now for S&P 500, I actually have a combination of index funds that gives around 15%. So this is a little bit more technology focused, so it includes S&P 500 and also a couple of other technology index funds I look at. So 15% is what I usually aim for. I think that's a pretty good range after fees. And then for private equity and hedge fund, I'm currently in the process of starting that. So 20%. So if you're investing in my future hedge fund, private fund, or investing directly into my company, this is the return you'll get. That is the target net return after all the fees. And you also get this as a monthly distribution. So it works out to be around 1.67% in terms of monthly distribution. That is the target. And the fee is very low, it's only 0.5% in terms of management fee. The next one is my own investing strategy. So that's really what I teach within Investing Accelerator. And these are advanced strategies that I teach in terms of using options to get a higher return, using options to get monthly passive income strategy. So for the monthly passive income strategy, we aim for around 30% return a year, 3% a month. So it's all about consistency here. So when you're looking at this allocation, you can see on average what I usually aim for is somewhere between 15 to 30%. And I would say if you are looking to invest, half of your portfolio should be in these smart index funds. It's what I call the combination. And then you can have, let's say, 2 to 300K into this hedge fund PE category. So that gives you 20%. And then afterwards, you can manage maybe 200, 300K yourself and get 20 to 30%. So this really depends on what your monthly income goal is. So if you already have 300K in a taxable account, then I would use the monthly passive income strategy to basically replace your income. And if you have IRA accounts, like self-directed IRA, you can use that to invest in index funds. And you can also actually use that to invest in a hedge fund like the one I'm starting or the private equity option I have, target 20% return. So if you're actually interested in investing in my hedge fund, or private equity as an accredited investor, you can click on the link below and watch the investor presentation. So that is pretty much how I would allocate between a 3 with a very heavy focus on the index fund, getting 15%, and then kind of increase it a little by using these more advanced strategies. Now, here's the thing with Bitcoin. So Bitcoin actually has a fairly high growth as well, but it is also volatile, and you usually need a special way to hold on to it, like a crypto exchange or a cold wallet. So personally, I have around 10% of my portfolio in Bitcoin, and I think it should be an additional category on here, which I didn't get to add when I was creating this chart for you. So that is pretty much it. And if you're interested in being one of the early investors into my hedge fund or private equity using your cash account or in US a self-directed IRA, you can click on the button below and you can watch the investor presentation. I'll also send you the investor package so you can take a look and you can have a call with me to ask me any questions you have. So I'll see you in the webinar.